Mr. Investor Lot, welcome back to the channel. Today we're going to be getting sticky. So this stock I literally just fell upon. I think you may know it, some of you, but I just wanted to present it to you today because I've seen the big sticky money been going into it, baby. So let me tell you a bit about the company. We'll talk about what the company does. We'll talk about which institutions are holding strong. We'll talk about all the key players and the bigger picture, including what's been going on around the world and how much this industry is worth. So VRT, Vertiv Holdings Co. is a company that some institutions are super bullish on. There are over 414 institutional owners, and in terms of institutional shares, you can see here, I don't know how this happens, baby, but there's 112% institutional shares. A whole lot of institutions are holding this stock, including some big boys. So we can see here on the left that some of the largest shareholders include Platinum Equity Advisors, we can see Blackrock in there, we can see Vanguard Group and Goldman Sachs Group. They are holding millions of shares here. As you can see, Vanguard Group has 19.8 million shares, BlackRock has 22.1 million shares, Platinum Equity 77.2 million. And recently, as you can see, there's two institutions that have exited here, but a lot of people actually increasing their institutional ownership. Some of them are increasing by 400% of their shares changed, up to 7.4 million. So there's lots of new positions, as you can see in green, opening too. And when we're looking at the average share price here, it's stated on Fintel, they were saying the average share price is roughly about $18 for some people. So they've got all these shares at an average price of $18 a share. So let's take a look at this company. What do they do? Vertiv, legally known as Vertiv Holdings Co., is an American Ohio-based provider of equipment and services for data centers. So with a portfolio of power, cooling, and IT infrastructure solutions and services that extends from the cloud to the edge of the network. So they are headquartered here in Ohio, Columbus, United States. They've got a revenue of $4.4 billion in 2020, founded in 2016, and they currently have a market cap of $6.8 billion. So providing equipment and services for data centers, why is this important? And what do data centers do? So at its simplest, a data center is a physical facility that organizations use to house their critical applications and data. So a data center's design is based on a network of computing and storage resources that enable the delivery of shared applications and data. And why would Vertiv be important, baby? Well, here it states what happens when a data center goes down. A power outage at a data center may very well be an IT person's worst nightmare. It generally means downtime, loss of business, added costs, and lots of stress and scrambling until the outage is resolved. Needless to say, the impact of a data center losing power can be enormous. Now, Vertiv offers these kinds of solutions, so power solutions, right? And let's take a look here. So why do data centers use so much energy? Due to exponential growth in data collection and use, the need for data centers continues to grow. The servers, storage equipment, backups, and power cooling infrastructure in data centers require electricity, and lots of it. So this article is in 2021 by datacenterknowledge.com. These are the world's largest data center co-location providers. So these 15 companies together account for half of the $54 billion global co-location market. So we have really large data centers. You can see here Equinix 11.1%. That one's in Cali, baby. Snoo. We've got other data centers across America. We've got one here in Austin, Texas, and then there's a string of them across Japan, China, another one in Texas, and you've got ones all across the globe, especially one here in the UK, London, baby. So when we talk about products and services in terms of Vertiv, we're talking about critical power. So they can supply all of this equipment. They can supply loads of services. So critical power, thermal management, so cooling systems for your data centers too, racks and enclosures, monitoring and management, and then all these types of services here. So for emergency response, you can have anything from remote services, preventative maintenance, repairs and refurbishments, as well as replacing spare parts and parts management, and having generator and switchgear services. We're going to be seeing data centers used a lot more as well. There's a requirement as well for clean energy, and it's critical for 5G success. These guys have a boatload of debt, right? They had a crazy amount of debt before and they're trying to pay it down, but they've got some generally good revenue coming in, and I think they're going to start to actually hit some hyper growth soon. So we can see here a little breakdown of the company. Vertiv brings together all hardware, software, analytics, and ongoing services to ensure customers' vital applications run continuously, perform optimally, and grow with their business needs. So they talk about solving the most important challenges for these data centers. So we're talking about communication networks and commercial and industrial facilities with a portfolio of power, cooling, and IT infrastructure solutions and services that extends from the cloud to the edge of the network. This has got them a revenue of $4.4 billion. This was the financial year of 2019. They have customers in over 130 companies, 20,000 employees worldwide, and obviously obviously they're headquartered in Columbus, Ohio, USA. So they've got a boatload of debt to clear, but this is very interesting here. On the 24th of February, we're going to see how much money they actually made, and they were talking about restructuring too. So here you're going to see Vertiv's fourth quarter and the full year for 2020 earnings conference call. Just above it, you can click the email here to notify you of company events, and you can join this call. When you click the link, you can register here, full name, last name, business email address, company. Hopefully we can get into this. If you don't have a business email, I don't know what they're going to do, if they're planning to just like cancel personal emails like when we got kicked out of the event for bingo, but I don't know, man. Let me know if you managed to get in. So previously, this is what they were talking about in 2019. They were talking about 2020, and they were talking about their restructuring program. So they wanted to support an ongoing margin expansion target where they expense $80 million in the third quarter pursuant of a restructuring program, including a $71 million reconstruction reserve. And they stated that this restructuring program, the aim of it is expected to drive $85 million in annualized run rate cost savings by 2023. So they want to cut down the costs so they can get more profit and actually pay down this debt. So it's primarily focusing on headcount efficiencies, their footprint optimization, and various activities that will support the execution of our long-term strategic initiative to hold fixed costs constant as we grow. So take a look at their guidance here and their estimates. You're going to be able to hear during that conference call, hopefully, where they'll talk about the full year, but also the fourth quarter of 2020. They said $1,240 million, $1.24 billion, and they said this should be growing their net sales to $1.265 million. Throughout 2020, they were stating that they've been delivering some strong second quarter performance. And within the last quarter, I think it was the third quarter of 2020 here, their net debt was $1.9 billion. And you can see here they were slowly chipping away from 2019, $3.2 billion. It then became $2.1 billion. And now we're sitting at $1.9 billion in net debt. They also announced back in March 16, 2020 that they were doing actually a stock repurchase program for $25 million, a little small sum. But they were stating that their management team and board of directors are committed to returning value to their shareholders. In terms of the short interest on this stock, it's only 6% here, short interest volume. And Reuters has claimed that Vertiv Holdings confirmed previously communicating a full year 2020 guidance of their net sales at $4.6 billion. So from 2019, they're slowly growing this revenue, but they're still stating that they think the data age is here and the big boom hasn't happened yet for them. So they're going to be in a growing industry. So there's lots of different websites that are stating how big the industry is going to be, and they're all throwing their forecasts out there. But if we take a look here at ksusentinel.com, it states here that the US data center infrastructure management market, and it was stating that they have a high compounded annual growth rate of 15.7% during the forecasted period of 2019 to 2027. Now, when we're talking numbers here, we want to talk about what these numbers actually mean. So when we talk about this data center infrastructure management market, they're stating that it's comprised of tools for monitoring, measuring, managing, and controlling data center utilization, as well as energy consumption of all facility infrastructure components, all of the IT related equipment, including switches, storage, basically what we do. And here you can see these are some of the companies competing in the US data infrastructure management market, and we're here, Vertiv Holdings Co. So these guys have stated that in 2019 the market was valued at 465 million, right? But it's projected to reach, just the US market alone, 1.4 billion by 2027. Now this was the 13th of February 2021. People are selling reports, so I'm not sure how reliable all of these reports are, or if they're just a copy and paste, but they're stating here, Vertiv, we are major key players in micro data center market reports, including IBM in there. You can also see Huawei, and you might recognize also some other names in this list. So now if we take a look at this is Moody's ratings and reports, and they were basically talking about rating action. And they stated that the review for upgrade initiated on December 10th, 2019 was when GS Acquisition Holdings Corp, GSA, a special purpose acquisition SPAC, announced plans to acquire a stake in Vertiv. So their $1.9 billion purchase will be funded with $690 million from the SPAC IPO altogether, with $1.2 billion via private investment in the public entity PIPE. And accompanying recapitalization is a game changer for the company, reducing its debt to EBITDA rate to about 5 times from over 7.5 times, and meaning improving its future prospects. After several years and hundreds of millions of dollars spent on restructuring, largely funded with debt, we can now expect Vertiv to generate about $100 million free cash flow in 2020 and more than twice of that in 2021, while the debt to EBITDA declined from about 5 times to about 4 to 4.5 times by 2021. So they're reducing and they're pushing down their debt. Another article here, as you can see, it says how much debt does Vertiv Holdings have? You can click the graph below for the historical numbers, but it shows that Vertiv Holdings had $2.44 billion worth of debt in March 2020, and this was down from $3.43 billion 1 year before. On the flip side, it has $293 million in cash, leading to a net debt of about $2.15 billion. And we can see here their net debt, they've already managed to work that down as well. So with 5G pushing pushing out, and there's going to be so much requirements for solutions here in terms of how much electrical consumption we're going to have. They are stating that they can help. They are Vertiv, and we offer a broad portfolio of telecommunications, data center, and edge infrastructure solutions to power, support, and protect today's emerging 5G networks. So will the growth of this 5G market also push them on to expand and explode? So these guys were talking about 5G in the edge. So as 5G networks start to push out across the globe, you're going to see use cases for new technology will emerge. So they were talking about smart cities and factories, smart homes and buildings, HD content distribution, virtual reality, oil and gas digitalization, high performance computing. And then in terms of machine to machine latency sensitive, we're going to have a smart grid, smart security networks. We're going to have real-time analytics. We're going to have low latency content distribution and defense force simulations. In terms of critical life and health, we're going to have digital health, connected autonomous cars. We're going to have drones, smart transportation, autonomous robots. We're also going to have augmented reality, website optimization, smart retail, and natural language processing. So with all of this growth, there's going to be so much demand for electricity, and they need to find a way to smartly manage this and also have solutions for this. Even with the C19 virus, as you can see, they'll be rolling out vaccines. These need to be kept as cold, baby. And if a lot of these vaccines aren't kept at the right temperatures, right now the World Health Organization says that as much as 50% of the vaccines go to waste each year because of improper handling, including temperature control problems. So these guys were stating that the Pfizer and Moderna vaccines actually need to be required at low temperatures. It was as much as minus 80 degrees Celsius, you can see here. So hospitals are purchasing these ultra cold freezers designed to hold the vaccines, right? However, they may be overlooking key components of their solution, which is power conditioning and emergency backup power for the critical equipment. To store these vaccines up here, it requires so much energy to keep them at like minus 80 degrees. Can you imagine? So what these guys are saying is they are offering solutions to protect the vaccines and protect these freezers from power sag, surges, blackouts, or brownouts that could compromise the ability to keep the vaccines inside at the right temperature. And we can see what blackouts and being away from the grid happens if you don't have emergency. Lots of people here in Texas, they still have the power outage, so it continues, and 100 million Americans are on winter weather alert. It's crazy, man, how many people are suffering in Texas at the moment. Heart goes out to them, man. Also, in terms of the data centers here, they require cooling, and they're going to be used like crazy soon. Thermal management will be key here. They've also got a new CTO, so they've been pushing for research and development. This man is Mr. Li Yang, Stephen Li Yang. He just looks like a legend. So one of their analysts was stating that this is how big they pictured the industry actually growing to. So overall IT spending, what drives the data center industry in 2021? The overall IT spending. So worldwide, IT spending is projected to total $3.9 trillion in 2021, an increase from 6.2% in 2020. When they're talking about the data center capacity growth, property service company CBRE was stating that in Europe, for example, they were saying there's going to be an unprecedented tsunami of supply. So with 400 megawatts of new data center space applied in 2021, and the same again in 2022. So this is back in 2017. I want to show you how much megawatts does a data center use. US data centers use more than 90 billion kilowatts of electricity a year, requiring roughly 34 giant 500 megawatt coal-powered plants. Global data centers use nearly 416 terawatts last year, nearly 40% more than the entire of the UK. So these people are going to be looking for solutions to actually lower their consumption of electricity, save themselves money, and actually become a little bit greener. And the reason why all of this is happening, what do these drivers mean for the data center? They're saying utility-like criticality is what they expect for 2021. On a basic level, data centers and digital infrastructure have become even more critical to the basic functioning of society and business. So we're going to be talking about smart cities coming through, all of that stuff. And with everything interconnected, we're going to need this more than ever. We can already see the switch towards digitalization with everything, even with payments with biometrics and stuff like that. Everything is going to be digitally powered, from devices to the homes. And they said this has been brought about, this lifestyle shift, by the global pandemic. So it's a big shift in the way we live now. They were also talking about small spaces and the edge. 2021 will see an increased focus on bringing hyperscale and enterprise level capabilities to edge sites. And they also spoke about 5G conversation turns to energy consumption and efficiency. As many countries start their 5G network rollouts in 2021, the conversation is expected to shift to 5G energy consumption and methods for improving energy efficiency. And again, sustainability comes into play. 2021 is likely to see an increased sustainable infrastructure innovation as the data center industry continues to wrestle with the fact that it accounts for nearly 1% of the global energy consumption just in data centers, 5G, everything is coming. As you can see here, 5G radio technologies, 5G networks from smartphones. We're going to have antennas everywhere, fixed wireless devices. Also talking about 5G applications in healthcare, automotive, consumer devices, smart factories, and smart cities. So one of the things that they were stating here is just critical physical thermal management, which is something that Vertiv does also. So always remember, this is not financial advice. This is for entertainment only, these videos. And make sure before you look at any investments, take a look at their financials too, because these guys still are holding a lot of debt. So let me know what you think in the comments below. Let me know if you think this could be a big juicy gold mine, which is why a lot of big money and smart institutions is putting cash into it at the moment, with some having an average share price of around $18. So let me know what you think. Do you think this is a long-term growth stock in which we could see some nice returns over the years? Let me know what you think. As always, I've just started Patreon. I'm trying to do a Discord group and get us all together talking about stocks in a community so we can do DD and look together at all the opportunities before us. So if you'd like to also sponsor me and help me create videos, I've got my Patreon up now. You'll see the link in my description box below, and I would love and appreciate if you're able to join the Patreon group and be a part of my community. They take less money than clicking join here, because when you click join here, they take 30% of the cash that I have and they put it into their YouTube pockets, baby. As always, thank you very much for watching. I appreciate you guys. If you're unable to join memberships or join the Patreon, just you clicking like on this video, hitting subscribe means the world to me. Also drop me some comments and tell me your thoughts about all the latest stocks that you've got your eyes on at the moment. Much love, Mr. Investor Lot. Over and out, baby.